My name is Samson Benjamin. Today we'll be talking about another interesting topic, and that is financial institution. Let's go. By the end of the class, our learning objective is quite simple. You should be able to define or explain financial institutions, list the different types of banking and non-banking financial institutions, explain the functions of each, but we'll concentrate our power on commercial bank. Financial institution can be defined as all business organizations which hold money for individuals and institutions that may borrow from them in order to give loans or make other investments. Financial institutions is divided into two. We have the banking financial institution and non-banking financial institutions. Under the banking financial institutions, we have the central bank, which we consider as the apex bank. We have the commercial banks, we have the merchant banks, we have the development banks, we have the saving bank, among others. While under the non-financial banking or financial institutions, we have the insurance companies, we have the hire purchase companies, and we have the building societies. What is commercial bank? What is a commercial bank? A commercial bank may be defined as a financial institution which accepts deposits and other valuable materials from the public for safekeeping, lend money to people, and perform other auxiliary services with the sole objectives of making profit. It could be owned by governments or private individuals. Characteristics of commercial banks. Commercial bank is a limited liability company. The motive of its establishment is profit making. They are members of the money market short term loan. Commercial banks are incorporated. They accept deposits and other valuable materials from the public. Commercial banks perform a lot of functions. One of the key function of commercial bank is acceptance of deposits. Apart from that, lending of money, agents of payments, safekeeping of valuable materials, provision of financial advice, acts as executor to their customers, insurance of bank statements. Can commercial banks create money? Yes, definitely commercial banks can create money. Commercial banks can create money by granting loans and charging interest on them. Commercial banks can also grant overdraft to people or customers that are operating on current accounts. Don't forget the fact that commercial banks has a particular fixed or money with the central bank, which we call liquidity ratio or cash ratio. That process directly they can use it to create money. Despite the fact that commercial banks have the ability to create money, it also has its own limitations. Limitations or inability of the commercial banks to create money can be through the volume of its deposits. Number two, through central bank regulations, monetary policies dictates by the central bank. The cash ratio or the credit ratio, it depends on the high or the low part. The interest rate charge can limit this commercial banks from creating money, and the desire of people to save can also be a problem. Assignments. Let's enumerate five problems of commercial banks in Nigeria. Gratitude is not the greatest of all virtues. Gratitude is the mother of all. Thank you for listening.